Tonzi99 asked the question, what are the rules on how to write off my auto with my home office? Tonzi99, this is an excellent question, and many business owners want to understand the dynamic between writing off auto, home office, and how to not get in trouble with the commuting rule, because we're not allowed to write off commuting miles. But what is this home office rule of being able to write off mileage to a new work location? What about my day job? How does this all play out? Well, in this video, I'm going to explain everything you need to know on how to write off the home office, the auto, and the powerful strategy of bringing those two write-offs together. Now, why this is tricky is because the rule for writing off auto mileage, and I love auto mileage because it's 70 cents per mile this year in 2025. That's a big deal, but it has to be between business locations or your business office to go visit a vendor or go visit a customer or go pick up supplies. Well, by definition, I need to have a starting and an ending point. For example, I went to the Apple store to go pick up a new iPhone. Well, I'm going to the Apple store, but where did I start? Where's the beginning mileage point? Well, when I have a home office, that gives me the starting point. If I have an office across town, then that's where I would start from there. This is why the home office deduction is so important, because I need to have a beginning and ending point in order to track mileage. So before we go talk more about auto deduction, and maybe we should go with the actual strategy and write off fuel, repairs and maintenance and depreciation, let's come back to home office. So the rule for home office is I first need a regular and exclusive space defined by square footage in my home that I use for my business. Now that may only be 10 square feet. It could be the size of a desk. That's my regular space I use in my home, studio, apartment, condo, a home I rent or a home I own, doesn't matter. What I'm worried about is the square footage. Where's that space? Is that 100 square feet, 200 square feet? And I use that place exclusively for my home office. Now in the movie The Accountant, they talk about the kitchen table. That's not a good spot because it's not used exclusively for the office. We're going to have breakfast, lunch, and dinner there. So we need this space, and I want to carve out the space even no matter how small it might be. Now the second rule is it needs to be my principal place of doing business. Historically, that would mean I don't do business anywhere else. It's my principal place of doing business. Well, I hate that rule, and so do a lot of other people, because I could have an office across town and still need to come home and do administrative duties. So a few years ago, there was a huge case, and due to this case, the IRS now allows for an administrative use exception, where even if I have an office across town, like a realtor or a landscaper or a dentist or a doctor or a lawyer or accountant, whoever, and I come home and then I do administrative duties to take care of bookkeeping or make phone calls or take care of emails to customers. Well, I'm able to do that even though it's not my principal place of doing business. It's the administrative exception. So if I have this exclusive space and I'm doing administrative duties, and even though it's 100 square feet, I now have a home office, which is going to unlock the auto deduction. We're still going to come to that in a moment. Now, once I have that home office space, then I have to decide how am I going to write that off. There's the traditional method where I come up with the square footage of that space proportional to the whole apartment or home, and then I take a percentage of utility bills, property taxes, mortgage interest, and yada yada. That's the standard deduction. Kind of a pain in the butt, and you have to do this worksheet, blah, blah, blah. But if I have this space defined by square footage, I can do the simplified method, where I can write off $5 per square foot up to 300 square feet, which equates to a maximum deduction of $1,500 a year. Now, again, that doesn't sound like a lot, but again, it unlocks the auto deduction. So for every client of mine, no matter how big or how small their business is, I want to take the administrative use exception for an exclusive space for even just 100 feet and write off this $5 per foot, so that's a $500 write-off. But now every time I leave my home to go do business, meet a customer, meet a vendor, go to the post office, go to Staples, Apple Store, Home Depot, wherever. Now my auto deduction is on steroids because at 70 cents a mile, and every time I leave the home to go to a new work location, I can write off that mileage. Think about 1,000 miles a month, 12,000 miles for the year of business mileage. At 70 cents, that's a write-off of $8,400. On top of the $500 for that little home office, I'm at $9,000 in write-offs, and so I could go earn $9,000 in my business, and I'm paying zero tax on that. This is a big deal. Now, before we talk about the commuting rule and put a nice bow around this entire strategy, let's talk about the auto deduction and the difference between mileage or actual. So you have two choices there. If I use my car, motorcycle, truck, whatever for my business, then I have to decide, am I going to write off the mileage at 70 cents a mile or the actual fuel, repairs, maintenance, depreciation? Now, the 70 cents a mile is a pretty good one. And if you're going to put on a lot of miles, I love it. But some of you are like, well, I'm going to go for a big truck or a more expensive vehicle, and I'm not going to put on a lot of miles, but I use it a lot for my business. And if you're in that situation, that could be a good write-off, better than mileage. But you need to know you have to show that you use your vehicle for more than 50% business use. So you're still kind of tracking what you do with your car, because personal miles are not a write-off and commuting miles are not a write-off. So you have to look at, what are my total miles, and did I use more than 50% of those for my business? And if you did, then whatever that percentage is, you get to take that of all your gas and the value of your car, which becomes depreciation, and repairs and maintenance and blah, blah, blah. Now, you probably will meet with your tax advisor to run the math on that and which one is better. But whatever method you use, you're stuck with that method for the life of the vehicle, as long as you own it. Now, again, put on a lot of miles, go with miles. More expensive, truck, SUV, fewer miles, I'm going to go actual. Now let's bring this all together with that commuting rule. No matter, even if you have a home office and you have a business, if you're commuting to that regular principal place you do business as a business owner, or you have a day job or a part-time job, you cannot write off commuting miles, period. But if you go to a new work location that's temporary, or you go to meet a client, or to go to work on a property, maybe you're in construction or a rehabber or a fix and flipper or a rental property owner. Whenever I go out to these different locations, that's a write-off. But if I'm going to a principal place of business every day, think of that dentist again, or that realtor, doctor, whatever, I'm going to that place every day, that's considered commuting. Can't write that off. The day job, W-2, can't write that off. Can't write off going to the grocery store, that's personal. But anything else that's related to your business, I love it. That is a business write-off under mileage or actual. So at the end of the day, what I want you to take advantage of is a home office deduction. Don't get greedy. We don't need to write off a lot of it, but we do want a home office deduction to create the starting point for all that business mileage, and then we're going to write that off under the auto deduction. People, having a small business is so powerful. It's an additional way to create income, and a lot of times tax-free, because I got all these write-offs to wipe out that income. And then I can take that extra income to pay down debt, put in the bank, buy rental property, invest in crypto, and all sorts of things to build a future for myself. That's the American dream, and a small business, that puts you on the superhighway to building your American dream. My name is Mark Kohler, and I've got a lot more where this came from. Please check out my YouTube channel, my podcast, as I try to help you better live your American dream.